Hi, this is Zak Mir with the weekend edition of the Bulletin Board Heroes. It is Sunday, the 22nd of August, and just worth revisiting Argo Blockchain, which obviously had that rather nasty attack earlier in the month. Looks like the shares have managed to shake that off. It had a gap higher for the stock on Friday, breaking that line of resistance there from late May around the £1.28 level, also breaking the 200-day moving average, which is a decent signal as well. So double signal with a gap and the break above the 200-day line, then the triple with the May resistance line break. Possibility now that while we're above the floor of the gap around £1.20, or actually £1.20, we could see the shares head towards the top of that rising trend channel from May as high as £2 by the end of next month. So let's see if the shorters can regroup after all that. On to another stock which may have frustrated the bears in the near term. I think I've heard one or two quips about the value or the NAV of Boanerges, but at the moment shares seem to be heading towards the appointed guess in terms of the rising trend channel there that I've drawn. Looks like that's heading towards 65-70 pence maybe by the end of next month, and you can see obviously over the recent past the shares have either been sideways or up, and all the candles have been positive ones, so that is pretty impressive stuff. Looks as though there could still be some momentum left in that situation. If you are looking for a stop loss area, probably back below 40 is the best you could do, given that that was resistance earlier in the month on the way up. Also good to see Capital Metals back in the picture as far as the bulls are concerned. Just if you're eagle-eyed, you would have seen that the shares have broken that January resistance line around 10.5 pence, and the longer we remain above that, the greater the chance of a move at least to the 200-day moving average area just below 15 pence. That ties in with the initial May resistance on the way down, and above 10 really. We're looking for a near-term rebound for Capital Metals. Stock which looks as though it's in a quite sprightly state at the moment is Europa Oil Gas. That seems to have finally bounced off the bottom. It's been bumping along the bottom around, the 1.2 pence area for quite some time. Very strong close on Friday, breaking the initial August resistance at 1.32, and the longer we're above that, the greater the chance of a move to the top of the rising trend channel from January, as high as 2.2 pence perhaps as soon as the end of next month, but at least while we're above 1.2, looking as though we're in recovery mode for Europa Oil and Gas. Another very strong looking chart, and sort of rather makes you wonder why people don't only go for strong charts and try and complicate matters with other aspects of a stock situation. But here we've got a rising trend channel for Ebiquity. That's been in place since December. We've had solid sort of 2 months of solid price action at not only the base of the price channel, but also the 50-day moving average at 52 pence, while we're above the low 50s, looking for a top of channel target as high as 85 or even 90 pence by the end of next month, or perhaps going into October. The other plus point there are the triple rebound for the stock of RSI 50, which can be a decent momentum signal for a situation. On to IMC, which I covered a few weeks ago. It's taken maybe a bit longer to get its act together. We broke that line of resistance there at 0.8 pence, but we've been in a kind of range between a 0.85 and 1.2 either side of the 200 and the 50-day moving averages ever since. Obviously, if you're cautious, you wait for a clearance of the 1.2 pence level, but it looks like enough dirty work's now been done versus the 50-day line around 0.89. Above that, we should be on our way and could be heading towards the top of that broadening triangle from July last year as high as 2 pence, perhaps by October time on that particular situation. Moving along to a stock which I feel is the king of Aquis. Maybe there's not that much competition, but here we have KR1. It was a good week last week for the shares. Just a sort of a bull flag situation here, just a little peep below the £1.50 level on Thursday, Friday, but a strong close for the week, and just an end of day close through the £1.59 initial August peak should take us up towards the 200 pence level. Looks as though, a bit like Argo, this is responding to the rebound or the recovery in the crypto space. And the best case scenario target maybe over the next 2 to 3 months, maybe by the end of October, heading up towards the £3 level. I think we're overdue a decent move for the shares, maybe echoing what we saw in January, February for this situation, but at least £2 perhaps by the end of next month. I think that wouldn't be overly optimistic. Onto a stock which has got a decent setup as well. At the moment, here we had a bear trap rebound for TP Group. That was around the 3.5 pence level, the low around 3.5 pence in June. We flipped below it and then flipped back up again. And then the gap through the 50-day moving average, a very strong signal, along with that January resistance line break. The view at this stage is that while we're above the 200-day moving average at 5.5 pence, looking towards 8 pence at the top of the broadening triangle from September last year, perhaps to be hit by the end of September this year. One of the more obscure situations which seems to be looking to improve itself is UniVision. Clearly, it's not the most liquid stock in the market, but looks as though the shares have built a base over the summer around a penny, broken that line of resistance from April around 1.2 pence, and above 1.2 we're looking for hopefully up to the top of that rising April trend channel at 2.2 pence, maybe by October time as well on that particular situation. Obviously, when this situation moves, it moves quite quickly because of the lack of liquidity there. On to Vela, which had fans even before the shares started to move, which was interesting, but earlier in the week, lots of chirping on Twitter. Current situations have been broken above the 50 and 200-day moving averages and also broken that February resistance line at 0.8 pence. The longer we stay above 0.8, the greater the chance of a move towards, 0.08, the greater the chance of a move towards 0.17 pence, which is the top of that broadening triangle from October. Obviously, if you're cautious, you wait for 0.09 to be cleared on an end-of-day close basis, but it looks as though the stock has actually broken out, especially backed by the spikes in volume. We obviously had the spike earlier in the week or last week, and then a decent volume spike on Friday just to cap it all. One of the more sort of obvious fundamental winners at the moment has been Vertu Motors, and here we've got the situation where shares have gapped higher through what was quite stubborn resistance in the upper 40s. The view now is that while we're above the floor of the gap, that is there at 47.5 pence, looking for higher prices, perhaps as high as 65 pence by the end of next month. We can get some follow through on this gap higher, and really only back below the 50-day line, 45 pence, really questioning the ongoing recovery for this particular stock. That's it from me today. More updates tomorrow.